Thank you very much for your time today. I think I can remember coming to the one-to-one events for quite a few years now, and the first time I came here, I can remember I started the presentation by telling everyone it would be very boring. And the reality is, I said it was boring because at the time we only had one asset, and that one asset was in Botswana, but we had plans and we wanted to change the company. What we wanted to do was grow it into a bigger asset with more opportunities to lower the costs and make it a low-cost operation through all of the commodity life cycles. Now, we've been working very hard for the last 9 years to do that, and we believe, the reality is that we're in the right position now to take advantage of this new bull market. We think this new bull market started back in 2016, and we think it's different from the previous bull market. The previous bull market was based on the exploration spending boom that had been before it. There was a lot of opportunities there, a lot of large finds that could be turned into production. It's not the same this time. Those opportunities have gone. If you look at the last 3-4 years, there has been no new 2 million ounce resource found. Yes, there's been extension of existing ore bodies, etc., but no new find. So this time, producers, if they want to expand to fill this new bull market, they're going to have to look at near mine. They're going to have to look at maybe resources that they've overlooked before because they're refractory in nature or low grade or in a difficult jurisdiction. Maybe it's a transition to underground. A lot of the big majors now will only deal with open pits with oxide resources. Maybe it's transitioning to underground. And what we've done is build a management team that can take opportunities. Finally, the one thing that most companies will look at, they're all looking for that 100,000 ounce producer. They're all looking for the one that's going to make the mid-tier straight away. We've taken the view that they're very competitive assets to go after, and you can be paying up to 90% of NPV to acquire something like that. What we're looking for is returns for our shareholders, and I say that because over 50% of the company is owned by management, so we're very concerned about making sure we make a return for our shareholders. So if I talk about us as a company, I think the easiest thing to do is to put through to our producing assets. As I said, we were boring once. I think we're a little bit less boring now, and the reality is we started off with Mopani Mine. We acquired it from IM Gold in 2011, and this is a good example of what I was just talking about. So as far as IM Gold were concerned, they were becoming a new major, and this asset wasn't big enough for them anymore. It only had 1 year's life, and this was back in 2011, and I'm still producing in 2020, so that obviously wasn't true. And why wasn't that true? Because the opportunity was to go underground. But at IM Gold, as far as they were concerned, was, well, yeah, we can go underground, but also it's going to become more sulfur in nature, the recoveries are going to go down, the costs are going to go up, it's going to be a difficult asset, and it didn't fit their portfolio. And for all the right reasons, they've exited. But what we saw was the opportunity to take it underground and actually lower costs. When IM Gold were running, they were running at $1,450 all-in sustaining. We're actually running at $1,050. The production levels have come down from 60, 70,000 ounces a year down to 30, but that's because we've gone underground, we've narrowed what we're mining, and we've made it economic. So Mopani now continues that way. 2015, we acquired another asset called Galaxy Mine in South Africa, and again, it fits the model. It was in care and maintenance. It had a small plant, 15,000 tonne per month plant, but it had a 1.5 million ounce resource. But the thing that people were shying away from, it was highly refractory, with only 55% recovery on a CIL plant. And people couldn't see in 2015 how that could be economic. What we saw was a great opportunity there. And that opportunity was about changing the nature of the operation, making it into a concentrate producer, increasing the size of the plant, and concentrating on the bigger ore bodies. Everybody had gone for the smaller ore bodies, handheld mining, very labour intensive, because they wanted to get the high grade because the recoveries were so low. Actually, by going to a concentrate model where we could get high recoveries, around 75% on the concentrate, we could go for the wider ore bodies. When I say wider, those ore bodies are around 40 metres wide, 100 metres strike, running at around 4.5 grams per tonne. We've done that. We're in there. We're mining. We're ramping up. Phase 1 is to take us up to 26,000 ounces at an all-in of less than 950, and we're about there, where this month we produced about 1,200 ounces, generating positive cash flows. By the end of next quarter, we'll be up to about 2,000 ounces a month. And then we're starting phase 2. And phase 2 we announced last year. And basically, by increasing the size of the plant again to 50,000 tonnes per month, we can put more feed through, by taking more production out of those wider ore bodies. We can put 50,000 tonnes through, and that takes us up to 43,000 ounces at an all-in of less than 750. And all of that is funded internally. So it's a great place to be. Now, we don't want to stop there as a management team. We want to keep acquiring these unloved assets. We recently acquired a new asset, and this is really why I'm here now and why I'm talking to people. And this asset's called Summit. And Summit is in New Mexico in America. Now, everyone says to me when I say that, well, you guys are African. No, we're not African. We're a gold producer, and what we look is for good returns for our shareholders. And the reality is, for 20% of the NPV, we bought a 30,000 ounce producer in America, fully permitted, and could be back in operation within 3 months. So I was quite surprised. We bought it through the pandemic. I wasn't able to visit. I guess I spent too much time in Africa. When something's in care and maintenance, it normally means you're going to take 12 to 24 months to put it back into production. I have now visited the site. I've been underground. Underground, there's almost 2 years' worth of pre-development already done. We can start production tomorrow, almost at full capacity. All the electrical reticulation, ventilation, everything is there. All that's required is one generator and a mining fleet. That's a big ask, but we can go through either mining contractor or you can acquire a mining fleet. If we go to the actual mill itself, the mill, there's only one thing that needs to happen there. We need to replace a white metal bearing on the ball mill, $100,000, and that can be up and back and in production. So within 3 months, we can have this back at full capacity. And when I talk about full capacity, it's a gold and silver mine. So it produces a concentrate again. So again, a little bit unloved because it produces a concentrate, but because it's very high grade, it's very marketable. It would be equivalent of around 30,000 ounce gold producer or a 2 million ounce silver producer. Its NPV is around $100 million. That's 1,700 gold and $25 an ounce silver. And the concentrate grade is around 600 ounces of silver per tonne and 9 ounces of gold per tonne, which is exceptionally high. So you're only producing around 1,400 tonnes of concentrate a year. So a very marketable asset. What we're looking to raise is the $8.5 million that we need to pay to Waterton on first production, plus around $5 million for a new mining fleet and some working capital. Okay? As a company, capital structure-wise, I guess I've already talked about this in a little way. Management is 50% of shareholders. Yeah, we've stayed that way all the way through. Through all the difficult times, we didn't go to the market to raise capital. We've funded it ourselves. We're now in a position where the market cap is close to around 43 million. And debt-wise, we were a high debt company originally, around $20 million. We're now down to $8 million. And by the end of next year, we'll have no debt in the company, unless we take some new out for Summit. Cash in bank, we have around $3 million. We haven't forecast what our production will be for next year yet, but there'll be an update in December. So I say keep an eye out for us, and we'll let you know how we're going and what we're going to do next year. But I can tell you it's going to be a very positive next year with the two assets that are producing and Summit coming online. Thank you very much.